So yes, major drilling group, international MDI on the TSX, currently trading at a price of about $12.59, about a $1.06 billion market cap. And they provide contract drilling services for mining and mineral exploration companies with a fleet of over 700 drills operating in over 20 countries. As of Q1 2026, 92% of drilling revenue is coming from seniors and intermediate clients, with approximately 75% of revenue from the commodities gold and copper. And this compares to in March of 2024. So I've changed those pie charts at the bottom of the screen here there. So these are now from March of 2024, where they had about 80% of drilling revenue coming from seniors and intermediates and 62% of drilling revenue split evenly between gold and copper. So overall, since the last time that I covered them, we can see the increase in revenue coming from seniors, as well as gold and copper now becoming a bigger portion of revenue. Now, the last time that I reviewed the stock was again back in April 2024, while the business traded at about $9.50 per share, and for about 12 times adjusted EPS, or earnings per share. And that's trailing. And today, the stock is trading at the highest point since 2013, now above $12 per share. Looking at the last quarter, Q1 of 2026, ended July 31st, 2025, revenue was up 19% to $226.6 million year over year, and the growth was primarily driven by the Explomin acquisition acquired in November of 2024, which contributed about $47.9 million for the quarter. But excluding that acquisition, revenue would have been actually down 6% year over year. Now, looking geographically, revenue for Canada and US just decreased by 4% due to customer delays in permitting and forest fires. South and Central America increased 92%, driven by that Explomin acquisition. And Australasian and Africa declined by 12%. Gross profit margin was down to 18.6% from 22.1% due to a continual competitive market in North America, as well as the margin for Explomin being lower due to a higher proportion of underground drilling. They also have adjusted gross margin up there on the screen, and that's just adjusting out depreciation and amortization, just so you can understand where they're getting that from. Now, EBITDA was down 6% to $32.1 million, and net earnings were $10.1 million, or 12 cents per share, compared to a gain of $15.9 million, or 19 cents per share in Q1 of 2025. And looking at the balance sheet, now it has shifted into a slight net debt position since I covered it last, as back in April 2024, it actually held a net cash position of $96.4 million, which again is now a net debt position of about $2.8 million today. And again, that reason for that shift is the acquisition of the Explomin in November of 2024 for approximately Canadian 115 million, which the multiple that they paid for Explomin was about 5.3 times EBITDA. Now, looking at the valuations, the business trades at about 53 times trailing earnings, an enterprise value to EBITDA multiple of about 10.7 times, and a price to cash flow multiple of about 11.7 times. Looking at the company's outlook, gold and copper prices remain strong, and management believes that it should lead to continued top-line momentum with the potential for modest margin improvement. Management also indicates that junior financing levels have begun to show signs of recovery, and we've kind of heard this from other companies as well in our interviews. And if we look here, you can see the junior financing environment is something that I've actually been writing an article on, which we expect to be published this week on our website. As according to S&P Global data, as of October of 2025, year-to-date funds raised by junior and intermediate mining companies have already reached US $12.8 billion, exceeding the full year 2024 total of US $10.3 billion. So again, we are seeing an increase in financings here, which is good, potentially for the sector. Now, Although S&P Global is forecasting exploration budgets for 2025 to follow a similar track to 2024. This is a slide from Major Drilling's recent presentation. So, you can see here, exploration budgets really haven't, followed yet. This is what we really need to see. Hopefully that will lead to that uptick in demand. But, that is the $1 million question, is whether these strong commodity prices and rebounding financings in the junior market will lead to significant demand for drillers into 2026 and beyond. It is certainly an interesting tailwind for service providers right now. So to conclude here, strong commodity prices, including gold and copper, bode well for seniors to continue to drill, and junior and intermediate financing market may be showing signs of recovery, which could help the pricing environment in North America, which has been very competitive and is under pressure right now. And of course, this could lead to increased demand if the junior market gets a little bit of an uptick and starts spending money on drilling. Fundamentally, the business is strong, remains profitable. They have a strong balance sheet. They're buying back shares. They continue to invest in their rig fleet, and they do have reasonable valuations. The company's acquisition of Explomin has driven revenue growth and geographic diversification, but their consolidated margins have come down given a higher proportion of underground drilling. So this is something to keep in mind going forward. We have a couple other mineral service companies under coverage. Both have performed quite well over the last year. In fact, one of them is up, about 90%. And, since our initial recommendation just 10 months ago, we are actually going to be putting out a update for clients on that business tomorrow morning, or I guess this morning when you see this podcast. And, just generally, I think that Major Drilling is a decent company. The balance sheet is robust. And for someone who thinks the business will benefit from, increased copper and gold prices and a potential sustainable rebound in junior financings and activity in that space, I think that it could be an option for individuals. And here is the disclosure.
Yeah, in terms of relative valuation compared to the couple other drillers that we have in coverage, what would be your thoughts? I think that Major Drilling, like a behemoth in the sector,
Yep.
relatively
It's definitely
speaking.
higher.
But I think, I think the valuations are higher, and deservedly so. They should be somewhat higher. But I think, if you believe that there's going to be a bunch of capital flowing in, some of the other names we're looking at maybe have a little more torque to that.
Yeah.
And like one of them has a net cash balance sheet, right, and has more leverage if you believe it's just gold than Major Drilling would be. So there's some other interesting names that we might want to look at that are outside of Major Drilling.
Yeah, exactly. And like to put it into perspective as well, like Major Drilling's trading at what I went over, just 11.7 times, trailing 12-month cash flow. One of the businesses that we're talking about here is trading at 3 times trailing cash flow. The balance sheet might not be as great, but it is a decent.
And the
company.
other one with the solid balance sheet is like 4 times. So
exactly.
So you're buying under a significant discount.